Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, this is Rohit from Life Self-Mastery, and today I'm excited to have Mohit Gulati, who's the managing partner at ITI Growth Fund, which is a SEBI-registered Category 2 fund, which is sector-agnostic approach towards venture investing. Mohit was earlier the co-founder of Altius Ventures and angel network Oliphans. Mohit has also done his engineering from University of Pune. Welcome to the show, Mohit.
Hey, Rohit. Thank you so much for having me here. Glad to be part of this podcast. And I hope all your listeners have an entertaining next 25, 30 minutes up ahead.
Absolutely. Mohit, I was interested in how did you get into early stage investing, and how did you get to be a part of ITI Growth Fund?
Very funnily, actually, I started my career in institutional equities, more on the public side. So I started at a hedge fund in Singapore, then moved to the domestic Indian markets. I was part of institutional equity research and sales. And the core problem I saw, this way back in 2012, was the good kept on getting better and bigger in India, which is exactly the case even today. So you have the likes of Unilever, which continue to grow larger. Right. But because of the lack of corporate governance and because of the lack of wings given to mid and small caps, there was just no middle layer for India. So my fundamental belief was that if we have to create larger businesses, it has to be at a grassroots level where the core basics of the business from day zero when they start have to be aligned towards making it big, which is how venture investing just happened to me. It was not even termed venture investments back then. It was more about, individual deals which were coming in and you were being part of them. And that kind of, my thesis revolved around working with management, helping them grow and scale businesses besides bringing in the capital myself. And I just, kind of have been doing that for the last 8-10 years of my life.
Correct. And how did I believe ITI Growth Fund is the family office of Sun Pharma. So how did you get to be a part of ITI Growth Fund?
So, this is in a way my own entrepreneurial baby. Right. Prior to this, like most of my friends in the Indian VC ecosystem, right. Some of us got into some very good juicy deals early on, made a good amount of returns there, and then felt that, hey, listen, we should move this a scale above and move to a fund structure. So I myself embarked on that with Altius Ventures, which was like a maiden sort of a category 2 fund that we wanted to set up. Made all the mistakes that I would tell entrepreneurs not to make. So partnered with the wrong co-founders, had a massive monthly burn which was coming in. Then very quickly, in about 12 odd months, I realized that, hey, listen, this is not going to work out. I need to pivot. And that's when I shook hands with the ITI group. But with the core learning that, I don't want to be a family office fund manager. So I'll only take about 25% of the fund's total corpus from them, while the remaining would be raised from elsewhere. But what ITI gives me is a bigger umbrella to sit out of, gives me the base to build this as an institutional practice. And that's how, from ITI's perspective, they had 21 different businesses, 5 NBFCs, so a full stack financial services business that was getting built out. And on the asset management side, they had a mutual fund coming up. They had a category 3 fund. So our venture fund just kind of fit in perfectly. Our minds met. Our thesis on what we want to invest in worked very well with the founders and the management there. And that's how we did a JV between the two of us. So today, as things stand, ITI is a sponsor investor in the fund. We sit out of the ITI office, but we restrict them to only 25% participation in the Growth Opportunities Fund Scheme 1.
Okay. And so my question is, how did you get on to raise the rest of the 75% fundraise? How did that happen?
So, I think fundraising is possibly one of the most humbling experiences most of us have gone through. Right. What we basically have done is we've taken initial capital from ITI, built a great track record. On the basis of that track record, which is institutional in nature, versus my own personal track record, which was not quote unquote non-institutional. So using the institutional track record, we've actually been able to garner a larger corpus for ourselves. But we still haven't announced the final close, so we still have a little bit of a leeway on fundraising. But as of now, for us, we were very clear from day one that the quality of deployment is a lot more important versus the quantity of money that we've raised. In India, if you go around, talking on how funds are raised, it's primarily at the back of distribution, wherein you have larger banks or private wealth managers who distribute your product and charge you a fixed distribution fee. We, on the other hand, haven't gone that route. We've raised money through our connects, through friends and family who've kind of believed in us. And that's really been our journey. So most of that fundraising has happened on the bank of direct relationships with people.
Interesting. And, you happen to be the first investor in Ecom Express, and you've other portfolio investments in Grab and Local Banya. So how did you get to invest into Ecom Express?
So Ecom Express, I think each investment serendipity attached to it.
Right.
If you're meant to be part of a journey, and I call being invested in a company a journey, because it's not about just cutting a check and saying, hey, listen, here's the money, go out, make it big, and give me astronomical returns.
Right.
If you go through my LinkedIn articles, you'll realize that each one of these, I've actually worked tirelessly with the management, and that's what has given me that delta on the amount invested there. So Ecom Express was a funny story. 2012, bad markets. I just moved out of equity markets at that time, and was just kind of wondering what next to do in life.
Right.
And then so my then partner and I set up a small institutional unit called Oliphans Capital, which was primarily meant to be an investment bank, and we just wanted to basically broker deals. And then we have 5 gentlemen who walk into our office and say, hey, listen, we want to set up a logistics business dedicated to e-commerce, and we are ex-Blue Dart ourselves. Can you help us raise $1 million? And we were like, okay, $1 million, that's a 2% management, so a 2% investment banking fee. So it's a good 12 lakh rupees starting income on day 0. Let's take it up as a mandate. Somewhere around, taking it as a mandate to actually working with the guys with creating the first financial model, which Ecom Express still continues to use, to taking a whole massive, China versus Europe versus US versus India. I think that belief in the management came to a point where we said, hey, listen, this is no more an investment banking deal. We don't want to make 2% here. We want to be invested ourselves. So at the age of 24, 25 back then, basically whatever I had earned in my life, I put it on Ecom Express because there was that much belief in the business that was going to be made. These were possibly, the most experienced people in the field of logistics. So we just bet on those people, and the rest is history.
Interesting. And what are the kind of returns you got out of Ecom Express?
So exit 1 was at a 8x, and exit 2 was at about 48 or 49x roughly.
Wow. Interesting. And you've invested as an angel investor. So what is the mindset change which happens when you shift from angel investing to institutional investing?
So I think one of the biggest mindset shift that happens for me, like for us personally, would be the timelines that we need to adhere to while you're an institutional fund versus when you're angel investing. That's number one, because institutional funds have a finite lifetime of investment, which could range between 4.5 years to about 7 years at top. While as an angel investor, you can be invested for perpetuity, and it doesn't make a difference because there's no gun on your head. That's number one. And second is the fiduciary responsibility before cutting each check. I think, as an angel investor, you're more sentimentally and emotionally driven. While as an institutional fund, when you're managing third-party capital, you are a lot more cautious about every investment that's being made. You don't let sentiments and emotions take the better of you. Your practical mind and thinking comes into place, and you actually ask some very, very tough questions to yourself as well as the founders up ahead. So, broadly, I think those are the two very important, significant changes that happen. The rest, of course, in terms of processes and all, your paperwork is a lot more, your team does a lot more work for you in terms of, deep diving on the space. And all of that is, the basic hygiene kind of work, which is, I think, step number 2, 3, 4. But number 1 is, can you modulate your mind to move from being an angel investor to being an institutional investor? And that really is the big delta.
Right. And, how's ITI Go different from any other micro fund which is there in the market right now?
So first off, we're not part of any angel syndications. Even in my personal experience, when I've invested in companies, I've not let it be open to any of the so-called incubators, angel groups, angel cities, chapters, none of that.
Yeah.
Fundamentally, I've not believed in that model of a herd mentality where, people are doing your 2.5, 5 lakh rupee piggy banking on each other. There's this star, so-called super angel who comes on board. That's not our thesis. For us, we genuinely believe that if the quality of your deployment is good, within 12 to 18 months, people will start taking note of it, and you will have larger funds coming in and knocking your doors, asking you, hey, listen, how do we get in? Without really proactively talking too much to the media or, doing a lot of sort of a halla around the whole thing, we've just gone around, we were amongst the fastest deployers last year. We did 9 investments in 1 year. A very recent Bain report published us on that. And it's surprising that they picked it up, because we've actually not even announced half of those things. These guys actually took the effort to go to ROC and find our name. So we've just, kept our heads down, worked with practically nobody, sourced some good quality transactions which nobody else has seen. And that I would completely commend and laud my team for, because they've actually spent a lot of time on the ground, meeting young founders, meeting people who are very, very deeply embedded into the domains that they are investing in. And we've really gone very deep on the thesis with which we invest in businesses.
Right.
So, yeah.
Sure. And how do you approach, portfolio construction with your fund?
So I think, if I wish I had like a, honest, straight out answer for that. My portfolio today is not by design. It just happened to us by serendipity. So there was no real plan that, these are the spaces that we're going to be invested in. We've just, come across things and people and companies which we've kind of started to like and love, and just been invested in them. So it's very funny that, today out of our 10 investments, practically, I think barring 2 which are in the same space, all of them are in different spaces, like spaces where they can't even explore synergies with each other. That's how far apart they are from each other. So, there's really, I think in the early stage space, you cannot have a method to madness. It's just better to be part of madness. But if you can, for me, my personal experience has been, if you can predict a trend before it is actually playing out, then you will end up making money. So when the whole world is running behind AI or ML, that was a story in the early 2000s, or maybe 2012 was probably great to play it. But today, there's no point if you're running around that. Can you catch the next Ecom Express? Can you catch the next Oyo or the next Ola or whatever, the next big thing? So for us, we've just tried to see that, can we catch that? Our first investment, funnily, was a company called RevOS. Today, RevOS is the largest OS powering 2- and 3-wheeler electric vehicles, where we've done speedometer integrations with Chinese OEMs. Our call was that EV will be big in India, but we don't want to take a call on a single EV manufacturer. We don't want to be betting on the battery infrastructure, because we don't know how that's going to pan out. Personally, I think HP, BP, IOC, and Reliance will own it. So what best way to play it? We said, let's play software. And that's the call we took, which was way back in 2019, Jan of 2019.
Interesting. And is ITI Go of sector and stage agnostic?
Yes, we are sector and stage agnostic. I wouldn't say exactly stage agnostic. We typically like to come in early, because if we want to work hand in hand with the entrepreneurs, we want to open up doors for them. We generally believe in rolling up our sleeves and doing a lot of leg pulling and the dirty work with our entrepreneurs, which typically would only happen in early to sort of a pre-series A stage. Post that, I think most entrepreneurs don't really need their investors besides their capital.
Correct. And do you have any criteria where you for every new investment they have to pass any set of criteria to make it into the portfolio?
Not really. I mean, when I invested in Ecom Express, I remember pitching to almost 31 VC funds in Series A, and they all would tell me that, hey, listen, you should have had a criteria on the age limit at which you should be funding people. Right. You funded people who are 55 years of age. Have you lost it? Right. And I was like, it doesn't matter what's the age, because an entrepreneur is an entrepreneur, right. And they can be seasoned ones or they can be new ones. It doesn't matter. So I think we don't really have any criteria as such. The fundamental thesis around every investment that I make is I like to be invested in truthful people. So if my entrepreneur and I share a bond of trust, then we back them to the hilt. But the day that trust breaks, and it's happened, it happens to all of us. It's happened to me also. The day that trust breaks, you not only lose money, you also end up losing your mind peace. So I think if I have to broadly put it, the one criteria I look at is just being invested in trustworthy people.
Interesting. And does the check size also vary by deal, or do you have a certain check size across?
So we have a slightly broader check size. We've done a deal which is at about 120K, which is our lowest ticket until now, and we can scale it up all the way to about 750K.
Correct. And
which is a pretty large range.
Correct. Yeah, it is. And when it comes to fund managers, what mistakes do they make when they're assessing market or market size of a particular idea?
So I think the unfortunate part in the Indian VC ecosystem, or I'm only talking about unlisted here, I won't talk about listed. Right. The unfortunate part about the Indian ecosystem is people take a call on their friendships with fund managers at larger funds, and they start looking at investments and deals on what would appeal to one of their peers at a larger fund. So can they be invested in that and then offload equity to their larger peer? Right. That is fundamentally flawed, because in times of Corona, your larger peer has already put his hands up. He was actually the first one to put his hands up and say, hey, listen, I'm not going to do anything for the next 6 months. So you took a call on me coming in later, but hey, I'm not going to do anything. So that's, I think, for us, the reason why we take pride in being, in doing what we do is fundamentally we believe that if you build businesses on the right ideology of showcasing some paths to profitability, showing cash flows coming in, you in times like these, you can actually weather this entire storm without need of substantial capital. If you look at my journey at Ecom Express, Grab, a bunch of these other businesses, humor me, where I've put in a small 1 crore check. March ended, they'll do a 25 crore top line with a 8 crore bottom line. This is in this year, by the way. Right. So if you can, invest in businesses which have a revenue projection, which they can meet even in the toughest of times, I think that will be the differentiating factor from being a good fund manager to being an opportunistic fund manager.
Yeah, got it. And you've talked about coronavirus, and it's been a difficult time for small businesses, and even world across. Looks like there could be a big recession coming forward. So what kind of advice would you give to founders who are looking to either raise capital, or they would want to scale up the operations in the next 6 to 12 months, or even would want to maintain the sort of growth they would want to project over the next coming months or years?
Sure. So I think you're right. I mean, I think global growth is going to take a massive dent in the next few months. It's already taken it for the first quarter of this calendar year, and I think there's going to be another quarter or two of pain. Uh, so in terms of, if I have to be very candid to founders, I'm going to tell them that, hey, listen, if you're burning an abnormal amount of money and you don't have too much to save you with the burn, then you are heading for trouble because you're going to run out of capital and no one's really investing today. And I don't see people doing large ticket deals in the next 6 odd months. Everyone's on a wait and watch. The world's just paused. Literally, we are sitting at home in quarantine. We are, headed for a tough time. But that said, there are opportunities emerging, particularly for countries like India, because the world's woken up and realized that, our dependence on China is just way too much.
Right.
So can we look at an alternative to China, which can produce at scale, has a low cost of labor, and can meet the same performance and safety standards as what China did? And I think India is the answer to the world, right?
Right.
It's not Brazil, it's not Spain, it's not none of the emerging pigs economy, and nobody can do it at the scale at which India can pull it. We have a massive talent pool here, which is waiting and raring to get into, a full-time employment. So if you are into a business which can, capitalize that change from China to India, you are in a good space. I continue to believe that, for a business like Oyo, right, which is of course scaled down a lot because of COVID, there still exists a massive opportunity because the model that they've proven in India to some extent can be taken world over. It's already been there. Right. So my advice to entrepreneurs is that 6 to 8 months is going to be a bumpy ride. It's actually going to be a shitstorm out there. Think of it that there is no world capital available for you. Can you put your head down and weather the storm? Because if you do weather it out, and if by chance you can showcase even like a 5% growth in this next 7 odd months, you will be a prime candidate for a larger check coming in the day we start seeing green shoots to recovery.
Oh, that's pretty good advice. And Mohit, couple of months back, I had Nishal Shetty from WazirX on episode number 126, who recently sold his company to Binance. And he said that if he could go back, he would focus more on distribution, since Nishal being a product guy. So what do you think about distribution versus product, and what can founders do to adopt a more distribution first mindset?
So, see, if you're talking about, a consumer facing product, right, distribution channels are different. If you're talking about a SaaS play, distribution channels are different. So, I understand consumer products. I'm going to talk more on that side, right, versus, a very deep SaaS sort of a play. What we've seen, we've been investing in Evolve Snacks, which is a packaged healthy snacking company. But unlike, the green snacks or the other guys out there, where we've actually done a product first and distribution following sort of thing, okay, where we've learned that, and for me, fundamentally, I'm a India guy. I understand. Right. I don't want to use the word Bharat guy because that's just a buzzword, which some of our peers at larger VCs now love to use on Twitter. None of them have actually even stepped out of their offices and been on the ground, right? So it's funny when they talk about Bharat by making comparisons to TikTok and saying, hey, listen, Bharat is emerging with talent. Sorry, that was kind of just digressing from the topic there. But going back on the product, right? I think as Indians, fundamentally, we love bang for buck. So if you can offer me a product which is either better than the one I was using, or gives me higher grammage, or gives me something more than the one I'm using, but at the same price, if not lower, which basically means more bang for the buck, then I will consume it. It's just a matter of bringing it in front of my face. Am I ready to experiment? I'm absolutely ready. I think Indians are the most non-rigid consumers you'll ever meet. We have, and most of the millennials, right? So just because our parents consumed Parle-G doesn't mean we are consuming Parle-G, right? Right. We want to move to cookies. We're probably looking at Theobroma cookies. We're looking at new age things like Swedish House Mafia and all sorts of things. So if you can get your product market fit right, there is ample amount of distribution available which will help you scale up. Everyone who was in sort of legacy old businesses is willing to give you wings to take it higher up. But unless your product doesn't appeal to the masses, there's no point even talking about a distribution strategy. Again, very particular to new age consumer products and FMCG sort of a business.
Correct. So get the product for right first, and then
That's right.
focus on
Yeah. I mean,
distribution.
look at Zoho, right? I mean, great product. It just has been like wildfire for them. I think even they didn't ever envisage that this is the kind of monthly subscription that they're going to garner from it. And this is a very very India centric business that was made out, right? Or Khata Book,
Yes.
great product. What a problem solver it is. And this is a guy who's literally sat there in a shop with his father, realizing that that is a guy who knows Bharat, right? He's literally been there in a tier 3 city, seen the pain points of his father. I think Ritesh is a product first guy, right? I mean, Oyo basically solved a massive pain point for 2, 3, 4-star hotels. So you got the product right, which is basically just bring uniformity in the whole thing, and then the distribution just flows in, right? The whole world wants to attach to you.
Right. So Mohit, a VC, what he sells is an access to money and expertise, which makes it a very people-intensive business. But is it possible to build a moat for a VC firm like yours?
So I think the biggest moat, and more so it's kind of getting proven now in these tough times, is the ability to be part of so not just being invested in a fund, but the ability to actually be able to bring in strategic inputs or connects within your own businesses. So I'll give you an example. We have a LP in our fund who's in the packaging industry, a very large packaging company, and they like to take active participation in some of our invest portfolio companies, where so much so that they've actually gone out and not only supplied packaging material, but also done a lot of learnings back from our startup in order to better their own packaging for larger brands. So I think, for me, that was like a little bit of a symphony that got played, because this is my investor who is talking to a company I'm invested in. Technically, there's no reason for both of them to even meet each other or talk to each other, right? Because there's a financial relationship on one. There's actually a financial relationship on both sides, and I'm just a bridge to achieving that. But the fact that there is that access given to both of them, which has brought in a betterment for both businesses. I think something like that going forward on a larger, more scalable way would be fun to kind of access into, where you can actually have LPs working directly or working hand in hand with portfolio businesses, and very very few VCs or PEs in the world actually allow that sort of a connect to happen.
Correct. Yeah, I mean that's a very unique take on that. And I was interested in how much attention do you pay to CAC to LTV ratio in the early days, and does it really matter?
So as an angel investor, it didn't really matter as much. Now it kind of does matter. But are we anal about it? Are we like hounding our entrepreneurs? Maybe not. We understand that each business will have its own inflection and growth curves. There will be moments in time when businesses can actually just have like a Paytm demonetization moment, right?
Right.
I mean, honestly, Paytm would be nothing if it wasn't for Mr. Modi. Right. So maybe COVID-19 is that moment for some of our portfolios. Like I just finished a call this afternoon with a company of ours, which is in the cardiac monitoring space, using a wireless ECG, which is a 6-lead ECG, which is 6 times better than the Apple Watch. And they are actually working directly now with some of the laboratories which are trying to find a cure for the COVID-19. So what's happened is, if you look at how medicines are developed, the life cycle of developing a medicine can be as high as 8 years with multiple human and animal testing. But in extraordinary times like these, that 8 years comes down to 8 weeks or even lower. And we've just kind of capitalized on that and gone out and, figured a way to make money and be very, very present in that space. So could we have envisaged this for 10-3T, even 4 months ago? We couldn't have.
Yes.
But there are these black swan events, which can just open up a new plethora of opportunities. So I think, as good investors, our job is to just be by the side of our entrepreneurs, let them figure their own thing out. I think that is essentially, your job, right? Which is to bet on people who can figure their own shit out. If you're actually, hounding them and telling them that this is what you should do, then, what's the point of betting on them?
Correct.
First example of what KKR has done with Siddhartha from CCD. I mean, the guy built the largest coffee franchise in this country.
Correct.
We may debate whether we like it or not today, but in 2003, when you and I probably sipped our first institutional coffee franchise, Cafe Coffee Day was what taught Indians to consume coffee. Did he build a great brand? Yes, he did. But can you hound him to get an exit for you? Maybe not.
Yeah. No, absolutely. Siddhartha has been a great CEO, and it's unfortunate how it played out. But interesting, you point about COVID, and are there other sectors other than health sector, like it could be education, any other sector which you feel is going to benefit out of the COVID virus?
Okay, so I don't understand edtech at all, because I've seen the same graph pan out for every single edtech company on planet Earth, which is this massive hockey stick growth curve,
right?
A nice little plateau for a few months, weeks, years, and then a massive spiral down. I can challenge you. Every single edtech company on planet Earth has had the same graph, and more so in India. So India, had like things like EduCom and AppTech way back in the early 2000s. Look at where they are today. Look at where Byju's is. Byju's is firmly on that plateau and is firmly going to start its journey downward. And I know some of the friends of mine who are invested there, if they hear this, they're going to curse me.
Right.
But, is it worth $5 billion when you put a gun on parents' head and say, pay 8.5 lakh rupees? It's not.
Right.
Is it sustainable? In COVID times, do you think parents want to pay 8.5 lakh rupees for their child's education? Boss, the child doesn't have a future, boss.
Right.
You can't, and you're not making money.
Right.
So you will start seeing defaults there. So education is something yes, maybe theoretically speaking, more people will spend time at home and try to upskill themselves. So you'll have the upgrads of the world or the Udemys of the world kind of capitalizing on it. But again, is it a very long drawn sort of an opportunity, or is it just a temporary 2-3 month phenomena? We don't really know. What I really see opportunity in is, and I was speaking to Amit Agarwal from Amazon very recently.
Okay.
One of the biggest opportunities we see is if you look at the apparel space or the whole branded accessory and apparel space, India just doesn't have a world leading brand out there. Right? While the US continues to churn out billion-dollar brands literally out of thin air. Tommy Hilfiger, which is one of the largest in the high fashion space, gets all its apparel made in Bangladesh, Indonesia, Philippines, and India, but continues to build it all in the US, right? India doesn't know how to build brands. What do we have? We have Peter England and Louis Philippe and John Players. Are these brands? These are pieces of shit.
Right.
So as China slows down, or as dependence on China slows down, I think India has a great opportunity in the textile space. Can we create like 10 very large world-leading brands? We absolutely should. Let the US slow down. They have 330 million people consuming. You have 1.3 billion.
Correct.
Why can't the next fast fashion brand be something better than FBB by Big Bazaar?
No, absolutely makes sense. I quickly want to do the top 3. Do you have any favorite business book?
Do I have any favorite business book? So I'm a diehard sucker for autobiographies. So I actually spend a lot of time reading about how people and their lives have gone around and how that has changed the way they work. So I absolutely love Shoe Dog, which is by Phil Knight. Right. It's the Nike story. So that's one of my all-time favorite books. 0 to 1 is like my Bible. So anyone and everyone who's ever interviewed with me, not just at ITI Growth, ever, even for an internship, you can only get into my organization if you build a summary of 0 to 1, which appeals to me.
Okay.
Right. So that's like a Bible. And there's a very interesting book which your readers should, sometimes spend time and read. It's called Freakonomics. It's a rogue economist who explores the hidden side of everything. It's a very, very interesting book.
Got it. I'll put that in the show notes. And if you could go back in time when you started working on ITI Fund, what is the one thing you would have focused on or done anything differently?
I think nothing really here. Zero regrets. I wish I could. I had the art of better storytelling and raising a much larger corpus, sooner than I could or I am. But besides that, I mean, I think, I'm 32, right? And I want to do this for the next 14 years of my life. At 46, I'll retire.
Okay.
So, I mean, I've kind of chalked it all out. So I think there's no regret. What I take pride in is the fact that the building blocks of this business have been right, and which were, a lot of learnings put together to actually get the building blocks right. So no regret. But I do want to, learn the ability of attracting high quality talent which can stick around. The unfortunate part today is that the younger talent is very opportunistic.
Yes.
So everyone's looking for that pre-MBA 2-year gig, and then they just bounce off. So I think I'm just trying to still search and focus on people who can, stick there for the longer run.
Got it. And do you have any favorite online tool, for example, Gmail, Slack, Zoom?
I mean, I absolutely love Zoom. Besides the fact that at the 45-minute mark, they somehow just throw me out. I'm guessing I'm not a premium subscriber.
Uh-huh.
And Gmail, of course, I mean, I think G Suite, all of us are using it. But there's this pretty interesting startup in Bangalore, and he's actually one of the most determined founders I've ever met. He's got a pretty interesting tool for VCs called Tag Hash, which basically allows us to export our deals into a common into a common G Suite folder, and automatically the entire team gets access to it versus us sending emails to each other and spoiling bandwidth on all sides, right? So I'm like sending a 5 MB email to my colleague, who in turn is downloading a 5 MB email. Everything is kind of synchronized without even the need of any kind of manual intervention. So such kind of hacks which have supported the already existing tools are what I would like to run around with.
Is it taghash.co or is it taghash.io?
I think it's taghash.io. I'm not too sure what is the website though. They also have an app.
Got it. I'll put that in the show notes. And what is the best way people can reach out to you and know more about ITI Group?
I mean, I'm possibly the most social entrepreneur, most social guy out there. So there's LinkedIn, there's Facebook, there's Instagram, there is WhatsApp, there's email, there's everything.
Got it. We'll put that in the show notes so that founders can reach out to you directly. Thank you so much for coming onto the show and speaking to us. I really enjoyed speaking.
Thanks so much, Rohit. Thank you so much. Pleasure.
Thanks for listening to the Life Self-Mastery podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.